Welcome back, everyone. My name is Mark, and I am going to update you on the latest XRP news. The XRP ETF has finally launched, a historic moment for crypto. But at the same time, the overall market is in chaos. The government shutdown is over, yet the damage it caused is only now starting to show. Right now, the total crypto market cap sits around $3.3 trillion, and the fear and greed index is near its lowest level in months. We're entering a period of extreme fear, and investors are clearly on edge. A big part of that uncertainty comes from the Federal Reserve. Nobody knows what they'll do with interest rates next, and that's shaking confidence across the board. The government shutdown made things worse. After 43 long days, the U.S. government has finally reopened. The longest shutdown in American history. Practically every federal department was frozen, and now officials are scrambling to restart normal operations. Congress voted to reopen the government last night, and even former President Donald Trump signed the bill to make it official. All 750,000 furloughed workers are now being called back, and they'll receive the paychecks they missed during the shutdown, but here's the catch. The damage is already done. Because while the shutdown was happening, no one was collecting key economic data. That means the October jobs report won't even include an unemployment rate. And without that information, the Fed and analysts have no real idea how strong or weak the economy actually is right now. It's like trying to fly a plane. Now, let's talk about the big headline. The XRP ETF has officially launched in the United States. This marks a huge moment not just for Ripple and XRP holders, but for the entire crypto industry. The first one to go live was the Canary Capital XRP ETF, ticker XRPC, which started trading this week. In its first 30 minutes, it already saw around $26 million in trading volume, blowing past early expectations. That's a strong start, especially considering how shaky the broader market looks right now. And this is only the beginning. Over the next few weeks, we'll see more launches coming from major players like Franklin Templeton, Bitwise, Grayscale, 21 Shares, and WisdomTree, all set to debut their own XRP ETFs later this month. In total, 5 major. Even with all the excitement around XRP, the bigger picture isn't exactly pretty. The crypto market is under pressure, and much of that comes down to one thing: the Federal Reserve. Just a few weeks ago, investors were confident the Fed would cut interest rates in December. The odds of that happening were around 70%, but now those chances have dropped to barely 50%. In other words, no one's sure anymore. That sudden shift has shaken the market. When rates stay high, borrowing gets more expensive, big investors become cautious, and liquidity dries up. That means less fresh money flowing into crypto, and more volatility for everyone still in it. You can already see the fear showing up in charts. Bitcoin's price movements have started looking suspiciously coordinated. Sudden spikes and drops that don't feel natural. Some traders even think large institutions are quietly repositioning before the Fed's next move. So what we're seeing right now is a strange mix, right? A massive step forward for crypto with the XRP ETF, but a wider market that's stuck in a storm of uncertainty. If rate cuts get delayed, or if the economy weakens further after the shutdown, we could be staring at a short-term bear phase across the board. It's not panic time yet, but it's a moment to be cautious. For long-term believers, this could become an opportunity. For short-term traders, it's a test of patience. When markets get shaky like this, smart money starts making moves. And that's exactly what we're seeing right now. Big-name investors are stepping back, questioning whether the current rally is built on real growth or just hype. Michael Burry, the man who predicted the 2008 financial crash, just announced he's closing his hedge fund, saying he no longer understands this market. That's a bold statement from someone who made a career out of spotting bubbles. Meanwhile, Warren Buffett has quietly sold billions of dollars in stocks and is now sitting on one of the largest cash reserves in history. When legendary investors like Buffett and Burry start pulling back, it's usually a sign they're expecting turbulence. Even YouTuber and investor Andrei Geek recently pointed out how some of the biggest AI companies are operating on dangerous levels of debt, spending money they don't actually have yet, banking on a future that might not come. Some analysts are starting to call this the next AI bubble, comparing it to the dot-com crash of the early 2000s. Back then, we saw thousands of internet startups raise billions in venture capital, only for most of them to collapse when reality caught up today. The same thing might be happening, just with fewer, bigger players. A handful of tech giants are carrying almost the entire stock market on their backs. It's a reminder that we might be living through another massive financial shift, just like the birth of the internet, but this time it's the internet of money. Crypto, stablecoins, and digital payments could be at the center of that transformation. While traditional markets are showing cracks, something big is quietly happening in the background. The rise of stablecoins. Apps like Cash App just announced plans to support stablecoin payments, starting next year. That might not sound massive at first, but with 58 million active users, it could completely change how people move money online. To put it in perspective, PayPal has around 450 million users, so Cash App isn't there yet, but it's still a major player. This move signals something bigger. We're moving toward a world where blockchain payments are becoming normal, fast, low cost, and global. If governments eventually adopt similar systems like stablecoin-based tax refunds or digital stimulus payments, it could permanently link blockchain tech with everyday finance. We're already seeing early versions of this in countries like South Korea, where tax refunds are being processed through blockchain systems on Avalanche in partnership with MasterCard and Fireblocks. It's a clear sign that the infrastructure is being built right now, even while the markets are scared. So while the short-term picture looks uncertain, the long-term shift is clear. Traditional finance is colliding with digital finance. And despite the fear, crypto is slowly becoming the foundation for the next financial era. Stay tuned, because this story is far from over. On one side, we've got an economy trying to recover from a historic shutdown, missing key data that could guide the Fed's next move. On the other, we've got one of the most important moments in crypto history, the launch of the first ever XRP ETF in the United States, happening right in the middle of this chaos. Markets are nervous, investors are divided, and no one really knows whether we're standing at the edge of a short-term crash or the beginning of a completely new financial era. If history tells us anything, it's that moments of fear often hide the biggest opportunities. During the dot-com crash, most internet startups disappeared. But a few of them, like Amazon and Google, became the foundation of everything that came after. The same could happen here. The weak projects might vanish, but the strong ones, the ones building real utility, will survive. And XRP might just be one of those survivors with the ETF launch. Institutional money is finally starting to take it seriously. Add that to the global adoption of stablecoins, new payment systems, and the slow merge between crypto and traditional finance, and you can see the picture forming. We're witnessing a transition from speculation to structure, from chaos to clarity. It won't happen overnight, and it definitely won't be smooth. But that's how every revolution begins.